Hello, everyone. Welcome back to another episode of our weekly series dedicated to price action based technical analysis. In this edition, we will be focusing on the XAUUSD chart, where the market condition has maintained its bullish outlook despite robust US economic data and escalating tensions in the Middle East. Currently, the gold proudly stands above the crucial psychological zone of 2000 US dollar per ounce. A quick review of last week's trading setup reveals how we were fortunate to capture over 500 pips in profits after patiently waiting for the anticipated bullish momentum to materialize. In fact, we had some situation where we had selling opportunities, but the inability of sellers to break through that temporary demand zone we identified during the midweek around the 1950 and 1955 area made it clear that buyers still have a say in this market, and since then we have been buying this asset all the way to the upside. Kudos to everyone who joined us on this profitable journey. If you missed last week's commentary and would like to review it for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. As we prepare for the upcoming week, we will dissect the current market conditions from a technical standpoint, taking into account the fundamental factors that influence this market. Utilizing our fundamental tools such as trend lines, key levels, and chart patterns, we aim to unravel the potential trajectory of price action in the days to come. Before we proceed, it's important to note that this video is intended for educational purposes only and should not be considered financial advice. My mission is to equip you with insight into the XAUUSD chart and enhance your proficiency in price action analysis. Remember, Forex trading carries inherent risk, so always proceed with caution and consider consulting a financial advisor before making any investment decisions. With that said, let's get down to the business. So right here, we are going to be narrowing our focus into the daily time frame, where I've been able to identify a trading setup that will guide our decisions for next week's trading session. So what I did was to take into consideration the nature of price action since the month of February, or let's say at the beginning, since the beginning of this year. But if we zoom into the nature of price action since the month of April, you'll see our price, after testing a new high, nosedive to the downside and along the line transitioned into a series of lower highs, giving us this beautiful descending trend line to work with ahead of the new week. Now, in addition to this trend line are a couple of levels which buttresses our price action remain in this range majority of the time between the month of March and right now. Considering what happened last week Friday, we finally noticed the breakout of the psychological level at the 1980 area. Now, if you remember vividly, during our previous session, we did talk about how important this area is. In fact, since the level was broken during the month of May of this year, you see how that area had continued to serve as a barrier for buyers in this market. As every point in time we saw our sellers came in to take price buyers out of that position. In fact, the same thing happened a couple of weeks ago around here. Not until last week we finally saw the breakout of that structure. Now the question going into the new week is this breakout at the 1980 a valid one, or will it at any point in time turn out to be a false one leading into a sell-off in this market? And in fact, if we take into consideration the impulsive move that broke out of that descending trend line, there are still chances that price could do some retracement, which could be a reflection of profit-taking activities back to retest that descending trend line in anticipation of another uptrend continuation. However, going into the new week, I'm going to be using the 1980 level as my key level for this week, as you all know how this level have played a major role in determining the direction of price action in the last 4 to 5 months. Now, going into the new week, I want to see how the market participant will be reacting to this market conditions above the 1980, where if price comes back to retest structure, we could look out for new opportunities to buy, or if price will break down that structure, finding selling pressure could incite a retracement into that area around the 1900, which interestingly lines up with that descending trend line. Now, in order to guide our trading decisions for the upcoming week, I was able to identify a simple setup on a lower time frame that we will be using to position ourselves ahead of the new week. But before we go into the details on that one, I would like us to take a quick look at the fundamental factors that will be affecting this asset in the coming week. And in fact, we will be focusing on the high impact event from the US economic docket, considering the assets on our watch list. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, for this week, we have a handful of high impact events coming in from the US economic docket. Now, the first one is coming in on Wednesday, November 1, and that is the ADP employment change. We also have the ISM manufacturing PMI, and finally, for this day, we are going to be anticipating the Fed's interest rate decisions. Then later that day, we have the monetary policy statement and, of course, the FOMC press conference, where the Fed chairman will be attending to questions from the press. Then later in the week, that's on Friday, November 3, we look forward to data coming in from the labor sector, the average hourly earnings, and the almighty non-farm payroll, which of course everyone will be looking forward to. Then finally on that day, we have the ISM services PMI. Now, as technical traders, what we are going to be doing to identify potential trading setup that we can use to guide our decisions ahead of this event. And as technical traders, we do know that the anticipation of this event alone has a tendency of influencing market sentiment, which would reflect on the chart as price action. Talking about price action, let's dive into the 4 hours time frame. And what I did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of this month, and it's quite clear that price action has been very, very bullish, as you will see how price had consistently and uniformly found higher lows, giving us an ascending trend line to work with. And at no point during the course of this month have we witnessed the breakdown of this ascending trend line, which further buttresses the strength of the buyers in this market. And as you all know, as long as we have an ascending trend line, we shall continue to look out for market conditions that will support an uptrend continuation. Now, in addition to this trend line was this beautiful trading setup I was able to spot here in the last, let's say, 7 to 8 days now. As you will see, price action was confined within the 1995 level and the 1963 area to emphasize the level of indecision at this point. Now, with the way things are going right now, we finally witnessed the breakout of the 1995 area to give us a potential uptrend continuation pattern after that impulsive move brought us into the structure we find right here. Now, with the way things are going right now, since price remains above the 1995, I would like to see some retest of structure to further emphasize an uptrend continuation. However, that does not mean that we will ignore the potentials of sellers. Of course, sellers could still come in here, but that does not negate the bullish outlook in this particular market as long as price still remains above any of those ascending trend line. So even if we see selling pressure come in such a way that it's retest the 1995 all the way to the downside, remember that we have an ascending trend line here which could still push price further to the upside. And in fact, if price breaks down this final ascending trend line, then we'll have no other choice than to get ready for a downtrend scenario. So these are my view here on the XAUUSD for this week, but trust me, I will be with you in the comment section of all my platforms to give you updates after monitoring how participants in the market will be reacting to the structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact it helps the algorithm promote the video to a wider audience of traders who may find this content material beneficial to them too. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this type of content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.